Okay, share screen. Let me know when you can see it. Oh, gosh. Cool.
Yeah, it's coming up. We can start from just go to the introduction page and we can start that. So welcome everyone. Thank you very much for joining for another FinTech Summer session. This week is week 3 and we're going to be talking everything about payments. So we're really pleased to have Muhammed Nana with us from Mastercard. He's the VP for Enablers and FinTechs at Mastercard. And he's going to cover everything. And I'm really looking forward to his presentation because we've got a lot of stuff which we're going to be covering in the next 45 minutes. As ever, we're going to leave some time at the end for Q&A. So if you do have any questions, please write them in the Q&A box. This session is being recorded and you will have a link to the recording for this session afterwards. And the only other thing to say is take lots of notes because I think you'll get thrown a lot of information in this session and some really, really good stuff that you might want to refer to later on. So without further ado, Muhammad, I'll hand it over to you to crack on.
Thank you, Saga. Good evening, good afternoon. Assalamu alaikum. Hello, everybody, and thank you so much for joining us today. My name is Muhammed Nana. I'm the Vice President for FinTech and Enablers within the Mastercard EMEA region, that's Eastern Europe, Middle East, and Africa. I'm actually based in South Africa, although I'm in Dubai today. So I'm in sunny Dubai, very hot Dubai, and I hope to walk you guys through payments and give you guys a better understanding from what payments is all about or what payments is all about, and look to obviously get a better understanding from you or look to give you a better understanding, but most importantly, try and understand from you what exactly or how exactly it is that we can help you understand payments a bit better. So without further ado, let's go straight into the detail. Just to confirm you guys are able to see my screen.
Yeah, your screen's perfect. Thanks, Mohammed.
Cool. There we go. Okay. So I've done a good introduction for myself, I think, but most importantly, in order, there's a saying that goes that in order to know where you're going in the world, it's important to know where you come from. So before we go into the detail in terms of cryptocurrencies, in terms of Bitcoin, and going into the detail of buy now, pay later, and how people are making payments today using smartphones, let's understand in terms of where it all comes from. So back in the day, what our forefathers or whoever used to do is they used to work on a barter system. And if you're obviously familiar with the barter system was all about, trading, where, for example, if I'm in need of a specific item, I would then just simply trade it, trade it with you, and I was able to barter goods or services. So yeah, because obviously there was no money back in the day, right? And this was how sort of the first payment actually took place, through this barter system. It then moved on to where, commodities were used. So for example, where, economics started to play out, where, for example, where there was a specific need, where a person had a specific need, they would obviously look for that need in order to trade that need for something else. And that's how spices became very, very, spices became sort of the main, commodity from a trade perspective. But let's be honest, there's only so much of spices a person can have, right? So, what happened was that this obviously wasn't, it wasn't a sustainable approach. And so from the spices piece or from a commodities piece, it moved off onto metals. And that's where sort of, money started emerging, where from a metal perspective, metals first started in the form of bronze, or should I say copper, bronze. There was certain value attached to copper, certain value attached to bronze, and then it moved on to silver and gold, etc. And from a metal perspective, obviously it was, it became quite heavy to carry these metals in your pockets, or even if, if you had perhaps a bag or whatever, it was quite heavy to carry these metals. So from metals, it then moved on to paper-based currency, which we obviously all know today. From a paper-based currency perspective, let's be honest, and here's a fun fact that I'd like to share with you, is that's about between 80 to 90% of payments today happen using paper-based currency, or should I say cash. Okay, so from then, cash has still been in existence and still in existence today. And, I come from a company called Mastercard, and our whole aim, our whole mission is to try and displace cash. So when I say displace, it's not remove cash, displace it with the forms of either a card payment or an electronic payment. And I'm not going to go into detail on that right now. We're going to speak about payments, but I'm just letting you know that, for this, with regards to this fun fact, cash is still king. Okay, cash is still a dominant factor, or this paper-based currency is still a dominant factor when it comes to making payments today. Then we're moving on to the digital currency piece. So I'm sure, as you guys have seen, there are many digital currency options today. And when I say many digital currency options, this can be in the form of e-wallets. This can be in the form of banking apps, where, for example, and let's speak about banking apps, right? If a payer needs to make a payment to a payee, you can simply go into your banking app. I'm sure we all have smartphones, and use, or even if, in certain markets where there's no smartphones, you can simply use a feature phone and access your banking account through a USSD platform, and you're able to then make a payment using using a digital currency, or using your cash as well, through this mobile phone. But what we're starting to see, to see an emergence whereby, and we'll go into the detail later, but we're starting to see the likes of Samsung Pay, we're starting to see the likes of Apple Pay, we're starting to see an emergence of these digital giants that were, primarily in the hardware business in the form of cell phones or the form of mobile phones, now moving towards enabling payment. Okay, so that's an interesting phenomenon, and we'll get into the detail on that in a bit. But it's just, the slide just basically shows you how payments have evolved from the barter system all the way to the tip of your fingers, where you are able to simply just make a payment using your mobile phone. And who knows, the other day, I made a contactless payment, and I used my watch. So I've got a smartwatch, and I use my smartwatch because my smartwatch is obviously attached to Samsung Pay. Not that I'm obviously here to advertise for Samsung Pay, but just to give you an example, I was able to pay the cashier with my smartwatch. And I'll never forget, the cashier looked at me and she was quite amazed. Everybody else looked at me, and I sort of felt like James Bond at that point in time, because I was able to make a payment with my smartwatch. There's things like biometrics that are coming into place, whereby, many other conspiracy theorists believe that there'll be chips into people, and we'll be able to make biometric payments just, from the palm of our hands. But who knows where it's going to go to? But I think as, technology evolves, so will the payments, so will the form of payment, evolve as well. Let's break down payments a bit more, right? So what we have here is we have a breakdown in terms of what happens when a payer makes a payment to a payee. So let's start off with the first simple terms from a cash perspective. So if I'm a payer and I want to, pay you cash, or I'm owing you money, whatever it may be, let's say it's 100 riyals or $100. A very simple way to pay you is simply just to hand over cash to you, and to give you cash. You can take the cash, you either put it in your pocket, you either bank it, or do whatever you want to do with it. But it's a simple type of transaction where a payer makes a payment to a payee using cash. If we were to break it down into an electronic type of payment, so let's look at the various electronic platforms that we have today. On the left-hand side, you'll see the payer can access an electronic form of payment through a number of channels. The first channel is obviously a card channel. It's what we know, it's what we have, and we can either tap to pay, we can either swipe the transaction, you can either swipe your card onto a POS device, or you can simply just tip your card in and enter your PIN and conclude the payment. So we all know card payment, and that's one of sort of the biggest forms of payment today, and it's simply a card that just sits in your wallet. The second form of payment is your device, which we call NFC, near field communications. And if you think of my James Bond example, that's very much what we call a device type payment, where I simply just tap and I pay, or I'm able to sort of do a payment through a geo type location using my device, be it a smartwatch, be it a smartphone, be it a tablet, etc. The third one are apps, and we see so many apps today within the market, within the various markets that we operate in. From apps, like I mentioned to you, Apple Pay, Samsung Pay, STC Pay, all these are apps where a person is able to make a payment, even WeChat Pay. In Brazil, you can even make a payment through WhatsApp. Okay, WhatsApp is a means of making a payment because the government has regulated it. There's been some concerns around it, but I mean, apps are even, you can even make a payment through an app. And, the way in which we see Facebook, or should I say Meta, the way in which they're moving, we're probably going to see a lot more. Let's be honest, Elon Musk is in the process of buying Twitter. who knows? I mean, he was one of the founders of PayPal, which is a very, very, dominant method of, of payments today. And who knows, maybe, payments will definitely be embedded within Twitter. Imagine having, you're able to pay a person. So you obviously, I'm sitting in Dubai. You guys are most likely sitting somewhere in Saudi. And I'm able to pay you just by going into Twitter. I mean, think about it. It's actually phenomenal. The third, or should I say the fourth piece of, or the fourth mechanism from a payment perspective is e-commerce, which we all know. And from an e-commerce perspective, you can pay either using, a bank transfer, you can pay using your bank card, you can pay through various different means, when checking out and making a payment. The fifth piece is obviously your online banking. So let's be honest, we all do online banking today, where we simply just go online, access our bank account, and we're able to make a payment from a payer to a payee. And then last but not least is obviously the enterprise type payment piece. So from an enterprise perspective, if I'm a business and I want to make a payment to another business, I simply enter, an ERP platform or an enterprise platform, and I'm able to make a payment, through this ERP platform from one enterprise to the other. And this is obviously, these are very high ticket items, but most importantly, it allows one business to pay another. Okay. Now you'll notice that the main mechanism here is access, right? So for example, in any emerging economy today, in order to access this type of payment or these types of payment mechanisms, except the card piece, you need access. You need access to a device. You need access to these apps. You need access, to a computer or your mobile phone to make an e-commerce payment. It's all about gaining access. So for example, it is very important that in order to really create a ubiquitous payment environment is to make access easily available to a consumer when it comes to making the payment. And that's what we typically do, right? From a banking perspective, from a payments perspective, all those within the fintech environment, they look to create low barriers of entry, or so let's say easy barriers of entry, in order to displace cash. Remember, I mentioned to you, we all want to displace cash. So we look for lower barriers of entry so that it's easier for people to make this payment. Okay. Before we go into the further details, I want to refer you guys to the further right-hand side of the payee side. So from a payee, obviously, is what we call a payment acceptor, and this person is there to accept the payment. So how do they accept the payment, right? Remember, I spoke about the card, and from a card perspective, in order to make a card payment, a payee or a payment, somebody who's accepting the payment, they obviously need to ensure that they have a POS device, or should I say a point of sale device, so that the person can either tap to pay, the person can either scan to pay, or not scan to pay, but the person can either tap their card in or tap their card. From a scan to pay perspective, we see QR codes very, very dominant, specifically in markets like China, where I simply take as simple as my mobile phone, and I'm able to simply scan the QR code with my mobile phone. There's a scanner with built into the payment app like WeChat Pay, like Alipay, and I'm able to scan that QR code. The QR code has all the credentials of the payee, and I simply, get the money sent over through to the payee. The fourth piece is what we call proxy or credentials. Now, remember, I spoke to you guys about WhatsApp Pay, and I said that you can even make a payment through WhatsApp or through Twitter. Now, the reality is that in order to enable that, you need to create some sort of proxy. So, for example, as Muhammad on my end, I mean, obviously, I'm a person, and you need to pay me, but in order to pay me, I need to create some sort of credentials or proxy, and I can do that either through my Twitter account, either from a WhatsApp perspective through my mobile phone. And what happens is my mobile phone number, okay, as well as my Twitter user ID, and whatever I use to authenticate that, I can use my email address, I can use my mobile phone number. That becomes a proxy for Muhammad Nana. So every time you want to pay me, if I'm in Twitter, you can simply just access me through my, my username or through my mobile phone number or whatever it may be. But those are basically the authentication mechanisms to when it comes to making a payment. Let's move on, okay? I'm not going to go into a lot of detail on this piece right now because I think I spoke a bit about it. But when it comes to a card type payment as an example, and I just want to expand on that also a bit more. Payment can happen either in the form of card present, where the card is present and the cardholder is present, and I simply make the payment, at the merchant, or should I say the payee. There could be card not present. So from a card not present perspective, that's what we call an e-commerce transaction, where the card is not present in the transaction, the card number is present, or that proxy is present. And then lastly, card on file. So card on file, a very good example of card on file. Think about Uber. Today, and that's what card on file means, is when you want to make a payment with Uber or Netflix, as an example, you simply add your card number into the Uber app. Uber stores your card information in a very secure environment. And every time you want to drive, or so you need a ride, or you want to go somewhere with Uber or Kareem, in Dubai, Kareem's quite dominant as well. You don't have to capture your card information every time. You just call for the taxi, or you call for the cab comes through, payment happens almost incidentally or almost inherently, and you simply just walk in and out. So you're not physically making the payment. It's what we call payment ubiquity, where payment is sort of incidental and just happens within the process. And then lastly is the destination. Okay, so where are we sending the payment to? The payee, like I mentioned, I could be sitting here in Dubai, you could be sitting in Saudi, and that's what we call a cross-border transaction, where, for example, if I'm sending money to you, it goes cross-border, so it's crossing the borders, very simple terms. And obviously it's got to go through certain government regulations, etc. But money is sent to you from a cross-border perspective. If money is sent within the borders of a country, it's what we call a domestic payment. Okay, so payments happening within the confines of the country. And then lastly, and I keep saying that, but this is obviously very, very important. So in any payment or electronic payment environment, or should I say electronic payment ecosystem, like the deck suggests over here, there are always three means of clearing a payment or settling a payment. The first one is authorization, where you authorize the payment to take place. The third piece is where you clear the payment, and the clearing of the payment fundamentally always happens either from the back end. So it's not transparent to you as the consumer. So, and I'll give you an example now in terms of what I mean by that. And then thirdly, from a settlement perspective, money literally has to get settled into the payee's account. So let's break this up a bit. Let's assume I need to make a payment to Sagar. All right, I need to make a payment to him, and he gives me his bank account information. So we're going old school here. He's giving me his bank account details. I go into my banking app. I capture the information. Okay. So remember, I spoke about authorization. By capturing the information and clicking on OK within my app, I'm authorizing the payment. So I, as the payer, I authorize this payment to take place. Okay. What happens is my bank gets this information. So my bank says, hey, Muhammed Nana, you want to make a payment. But now we need to ensure that this specific payment is cleared over to the respective payee. Okay. They don't know who Sagar is. They've obviously never met him, because he doesn't bank with them. He banks with another bank. I bank with my bank. Okay, so it's two separate banks. And what happens in this instance is, at the point of is what we call clearing. So at this point in time, the bank looks at all the information. So all the information that I use before I authorize the payment, I basically use Sagar's account number. I use his bank. I use his bank name, his bank account number, and whatever information there is there, and the amount. So my bank knows, oh, okay, cool. This is the account number. This is the bank it needs to go to, and that's the account number. So what happens is they clear the funds out of the account, out of the bank's account or my account, and they clear it to the recipient's bank account. Okay. The recipient gets this information. They say, okay, cool, I am this bank. And then they say, oh, I know this bank account number. This bank account number is on my books. And then they settle. So they actually settle the money into Sagar's account. So that's what we call authorize, clear, and settle. Where me as the payer, I authorize the payment to happen. The banking network, they clear the payment transaction. And then lastly, the bank on the other hand settles the payment transaction. Now, from a banking perspective, I'm speaking I'm speaking more from a banking type perspective, but this could happen through SWIFT, where, it happens, through international type transactions. It can happen through, third parties like an STC Pay, where they can do this end to end, what we call e-wallets. And it could happen through a blockchain or distributed ledger platform as well, or a digital currency. And that's very much what we call in the payments world. So if anything that I leave you with today, just know that in every payment, it's all about authorization, clearing, and settlement. And yeah, I mean, I'm not going to go into detail at the bottom, but as you know, the benefits on this is that it's electronic, it is secure, it uses the multiple services, and we're looking at convergence where, for example, payment convergence is happening where card, electronic funds, distributed ledger will one day all become one. So we're looking at a lot of convergence that is taking place. Now, why am I showing you this slide? Okay, so for example, today, if I have cash on me and I am able to make, pay pay Sagar, as in the example that I gave, I can simply just take out $100 and I can give Sagar and the transaction is done. However, in an environment like this, when it is electronic, not only is it secure, okay, because I'm doing it electronically, but most importantly, my bank has a record of my transactions or has a record of all this information. So is Sagar. Sagar's bank has has a record of money coming into his account. So they're able to review my account and they're able to say, okay, Muhammad, we know that, from the data that we have, that you have X amount in your account. This is how much you have on on a daily basis, on a monthly basis, on a yearly basis. So, and they know that I'm able to make these payments. They know that the guy is able to receive payments. So that moves now into lending, where from a bank perspective, they're able to, because they understand, the customer on record, and they're able to then lend money so that as a payer, I'm able to sort of extend myself and I'm able to make payments for bigger, for bigger items. So that very much is why it's so important to go into electronic funds, because you are able to create a a footprint of the consumer, and the footprint, and the consumer actually, his transactions are recorded, and it's then moves into some sort of lending type capability for for the banks. Okay. When it comes to payments, right, there's so many means of payments, and I think I spoke a bit about this, right? I've spoken about cash, where it's as simple as $100 bill going to a specific person or payee. We speak about cards, and I think I've spoken a lot about cards as well. We speak about automated clearinghouse, where, for example, an automated clearinghouse is what we call, the acronym is called ACH, but it's all about clearing payments from one bank or from one party to another party. And think about authorize, clear, and settle. The automated clearinghouse clears those transactions. So you think about it this way. There's obviously multiple banks in Saudi Arabia. Not all the banks speak to each other. So in the center of all these banks is what you call an automated clearinghouse. And we'll go into detail in terms of who the automated clearinghouse is in Saudi Arabia. MADA as an example, right? And they sit in the middle and they clear these transactions. So for example, as a bank, I integrate into MADA or into the automated clearinghouse, and these people or this clearinghouse will simply clear the payment from one bank to the other bank, so that all the banks don't have to speak to each other. Because imagine what a spaghetti network that will look like. So you have one clearinghouse that does this clearing for, on behalf of all the banks. I mean, I know it's Wednesday, it's a way back Wednesday moment or a throwback Thursday moment if this was on a Thursday, but checks are still very much alive. People still go ahead and write checks. I'll be honest with you, I've never written a check in my life. Believe it or not, I'm a millennial. I've never written a check, and I don't think I ever will write a check, but checking is also a means of concluding a payment. Then you have real-time gross settlement, RTGS, and this is very much a way of clearing payments or fulfilling payments on real time. And last but not least is the whole emerging payments piece, like the James Bond moment that I mentioned, where I'm able to make a payment by simply just tapping and making a payment, through my mobile phone, where I use my phone to obviously fulfill a payment. Now, I spoke about this, in the beginning of, of the presentation, so I don't want to go into a lot of detail on this. But we're still seeing within the global economy, cash is still the main method which consumers and new businesses use when making payments. Okay, like I mentioned, and there's the fun fact: 85% of all payment transactions globally takes place, through cash. So if you look at the graph on the right-hand side, cash, like I mentioned, is still king. Then you have checks. Yeah, checks are still there. Debit cards are more predominant. Then you have your credit cards, and you have your debit transfers. Then you have your credit transfers, and then you have, other means of payment. When we say other means of payment, those are typically, your e-wallet type transactions. Those are typically, your digital type of payments that, that would take place as well. Then from a value perspective, and this is very important. A lot of value that is transferred is still transferred. So very important to understand this specific graph over here, these two graphs. On your right-hand side, you see cash is still, from a transaction count perspective, a lot of people make payments with cash. But from a value perspective, a lot of value globally is done on credit. That means many people are using a form of credit to make a payment. So not necessarily on your credit card, but what people are doing is they are borrowing money to make a payment. And what's the best way to know how to make a payment from a value perspective? Is by creating that footprint, or that, or the footprint, so that you as a consumer, banks are able to know exactly who you are or where you are. And that's the credit transfer piece. So the reason why the value is so high, think about it. A lot of people take out a loan to buy a car. A lot of people take out a loan to buy a house. And that's what we mean by credit transfer, where it's not specifically a credit card. Credit card, as you can see, is still very small, but credit transfer are sort of people taking out loans to make payments, and large payments like car payments or any asset that they would like to buy. So now we're speaking about the entire value chain when it comes to performing a payment, okay? So when it comes to making a payment, the customer, okay, gives a merchant. When we say merchant, remember I'm speaking about the payee. Merchant can be a store, think about a Carrefour store, think about, a Walmart store. This is what we refer to as a merchant. The customer goes into a merchant's store, gives the merchant cash, okay, in exchange for goods or services. Now, what cash is this, right? Obviously, they use what we call the central bank currency, because the central bank puts a currency out. So obviously in the US, it's US dollars. In Dubai, it's the dirham, and obviously in Saudi Arabia, it's the Saudi riyal. Now, when it comes to making payments, people may think that, you know what, the cost of cash is cheaper if I use cash, because it's simply, there's 100 rand of, $100. I pay $100, and as a payee, I receive $100. But I still got to go as a payee, and I've got to store that money safely so that nobody gets access to my money. Otherwise, you get things like crime, you get things like itchy fingers where people want to steal your money. So these are what we call cash logistics. And in order to manage this logistics, there's obviously a cost involved. So the point I'm trying to make on this specific slide is that, and I think if we move into the next slide, is that within the ecosystem, there are various players that take place, or there are various players who work within the ecosystem to ensure that the funds go from the payer to the payee within that electronic network. And most importantly, there are obviously costs involved, but it's important to understand that it doesn't mean that if I do an electronic payment, it's more expensive. Because, for example, the banks are going to charge you a fee. So, for example, if $100 is paid in cash, the payer pays the payee, he gets that $100, he still has to store it, he still has to bank it. There is a cost of, there is a cost of cash. As opposed to paying through an electronic means, obviously your bank is going to charge you a certain amount. It doesn't mean that it's more expensive. Okay, so I just want to leave you with that. So let's speak about the key players within the ecosystem. Today, we have a merchant, we have an acquirer, we have a network, also known as a clearinghouse, and then we have the issuer, okay? So and I think I've spoken about this, but let's double click a bit on this. Excuse me. Who is the merchant? The merchant is typically a store, either a small, medium, or large enterprise who is selling a good or service to a customer. That is the merchant. Like I mentioned, either Walmart, Uber is a merchant, for example, because they're selling a service to you. I can mention Walmart. You go to the movies, to the cinemas, they are obviously a merchant because they're giving you a service. Then there's what we call an acquirer or an acquiring bank. Now, as a merchant, in order for me to accept a payment, I need to ensure that I have an acquiring bank. Okay, so my acquiring bank is the bank that I bank with, where my bank account is. Remember, I spoke about Sagar having his bank and me having my bank. And this is where, so Sagar is not necessarily a merchant, but he's a payee, okay? And he banks with a specific, what we call an acquirer, and they accept the payments on behalf of Sagar or the merchant, okay? Then I spoke about the network. and that's an automated clearinghouse. And that's also what we call a payment system operator. So they, if you think about it, they sit in the middle and they operate the entire ecosystem, and they process the payments on behalf of the payer and payee. In this specific example, it's Mastercard, Visa, it could be American Express, it could be MADA as well. Obviously, within your market, MADA is very involved, and they regulate the entire payment ecosystem, not just for cards but for other payment types as well. And then, most importantly, the customer, or should I say, the payer, is obviously he banks with an issuer, and the issuer is what we call the payer's bank, and he stores the payer's funds. So when it's time to make the payment, he makes the payment to the acquirer, or the issuer makes the payment to the acquirer via what we call the network. Okay, so this in a nutshell is what we call the payments ecosystem, and these are the key players within this ecosystem. Now let's think about card, right? So we can speak about many different types of payments, but let's speak about card, and let's speak about how funds are exchanged and how money is made, okay? We all have cards, and that's why I'm breaking it down, not because I work for Mastercard. I thought I'd just use a card type example because it is the most easiest way to understand this, so that by the time we walk away from here, you can obviously utilize the exact same capability or the exact same methodology for any other type of payment, okay? So let's break it down. Here's your customer, okay? So the customer is me, Muhammed Nana. I want to buy something from Sagar, who is the merchant, okay? And what happens now is, remember, I have the issuer, because that's where my bank account is, or that's where my card account is. And then Sagar has an acquirer, that's where his bank account is. So at this point in time, I go, I get my item of goods, and now I want to check out or make a payment. I simply pull out my card, or even my watch, because my card is obviously attached to my phone or to my, to my wallet. And all that I do is I simply swipe my card, tap my card in, or I'm able to tap my card. Sagar then obviously, electronically the message is sent. So the message is sent via the payment network. And within Saudi Arabia, your payment network is known as MADA, okay, which is also part of the Saudi Central Bank. And so the Saudi Central Bank then is the intermediary between the acquiring bank as well as the issuing bank. So a message is sent through to the issuer to say, hey, Muhammad is your customer. He made a payment. You owe me $100. The issuer then does the settlement through MADA. Now, how does Mastercard and Visa fit into this? Now, MADA obviously operates within the domestic confines. Remember, I spoke about cross-border payments. So let's say, for example, you have a bank card, and if you do have your bank card on you right now, I'd like you to take out your bank card and have a look at it. So on every bank card, you'll have either a Visa or a Mastercard logo, or an American Express logo, for that matter. And so, if Sagar was based, for example, in the UAE, and I was based in Saudi Arabia, MADA would not fulfill that payment as part of their payment network because it's cross-border. Remember, I spoke about cross-border earlier. That payment would go through either Mastercard or Visa, whoever you have on your card. That's who it would go through. That payment would go through. So, headquartered in Riyadh, MADA is part of SAMA, which is the Saudi Central Bank. Okay, so they make sure that they have, access to all these transactions, and they're able to view and monitor all these transactions, and they have fraud controls in place to ensure that fraud does not take place, and the integrity of what we call this typical card payment flow is kept intact. Okay. Now, how do these banks make money? So these banks obviously sit in the middle, and they make money. So, in a typical card type transaction, the acquirer, who is the merchant's bank, they pay the issuer a fee called interchange. Okay, and interchange is normally either between 1% to 5% of the transaction, right? So, for example, on a transaction of $100, the acquirer pays the issuer, let's say $1. Let's say, for argument's sake, it's 1%. They would pay $1 over to the issuer. So the issuer earns that interchange. The issuer earns revenue. So now you're probably thinking, oh no, so the acquirer makes no revenue out of this. They pay over $1. That's incorrect. What the acquirer does is the acquirer charges the merchant, like Walmart, like Uber, they charge the merchant a merchant service fee, and they obviously add a markup. So for example, if the interchange is 1%, the acquirer typically charge anything from 2 to 3%, and they make a margin or they make a revenue of around 2% because they're providing that service, okay? And then obviously MADA, Visa, and Mastercard, how do we make money, right? Because we sit in the middle. So what they typically charge is they typically charge a processing fee because they process the transaction between the issuer and the acquirer. So they charge a processing fee to both the issuer as well as the acquirer. And that's how the payment network that sits in the middle, or the automated clearinghouse, makes their money, by simply charging what we call a processing fee. Okay, and that very much is what we call a typical card payment transaction. But like I mentioned to you, a similar methodology could work, whether it was an electronic bank payment, where payment is happening from one bank to the other bank. This is how payments happen in the background. Now, obviously, as a consumer, you really don't know all of this, right? Because what happens is you go to a Walmart, you go to Starbucks, you buy your coffee, you tap your card, or you tap your phone, or you tap your card in, and the money, I mean, is released in sub 5 seconds, right? You get, I mean, your goods and services, you get that approved receipt, in sub 5 seconds. But in the background, all of this is taking place. So you can imagine what processes need to be in place, what systems need to be in place to ensure that the system is up and running at all times. And most importantly, hacking is such a big thing today. So you need to ensure that, from a fraud perspective, your network is completely soundproof and bulletproof, so that as a network, you don't have, your systems are not compromised by hackers. So where is payments heading to, right? So obviously, as you can see here, people before, used to obviously have a way of working. And this lady, for those of you who don't know, she thinks that she's on a typewriter, and because what happens is when you would type on a typewriter, you would usually obviously move the paper from one end to the other end. And yeah, I mean, it's taken a while to adopt because she's still doing this on a computer. Anyway, I shouldn't have explained that, but in case you didn't know. So before we look at where payments are headed, it's very important to look at the consumer. You guys are what we call consumers. I'm a consumer as well. And what do we look for when making a payment? As Muhammad, I don't wake up in the morning and say, hey guys, today I'm going to make a payment. You don't do that, right? Payments it has to be done. Well, unfortunately, we all have to pay bills. We don't get excited about it. We have to do it. But what do we look for? We look for convenience and trust when making a payment. We know we have to make a payment. It's part of being grown up, right? So we don't get excited to make a payment, but we want something that's easy, something that's convenient, and something that we can trust when making a payment. Remember, I said I want to use my watch to make a payment. That's me being James Bond, obviously. But it's easy for me because I don't have to carry my wallet anyway. Everything's on my hand. I can sometimes just tap and pay. That for me is what I call, it's my choice. It's convenient for me, and I trust my watch to make the payment. Okay, you could use something differently. Okay, so what we're seeing globally is that 46% of consumers have used 2 or more fintech services. And I know last week or 2 weeks back, you guys spoke about fintechs. So I'm not going to go into detail on what fintechs are, but what they're saying is that people are not necessarily using banks anymore. They're using fintech services, okay? So in 2019, 46% of consumers used a fintech service. 86% of consumers, okay, those who were impacted by COVID-19, want to have more control over their personal financial information and, to determine their credit worthiness. So for example, all these banks take your information and they obviously create a credit score for you so that they want to offer you loans. That's what banking is about. But consumers, 86% of them, just shows how high they are. They want to create personalized, experiences. Data, obviously, 90% of individuals and business leaders feel that data privacy is very, very important. So people, they are very, very cagey in terms of their data or their information. They don't just want to give it to anybody, okay? And lastly, 93% of consumers would trust a company that commits to the data responsibility principle. So what you're seeing here is choice, okay? People are choosing digital platforms by using fintechs, okay? Convenience, most importantly, because it's convenient for them. And lastly, trust. They choose trust when making a payment, okay? So as consumer expectations are evolving, the financial services industry, be it banks, be it fintechs, are thinking very differently about digital experiences and innovation. So to answer your question, or to answer the question in terms of where payments is going, it's not about where the payments is going, but it's about creating unique experiences for the customer, because customers today, they don't look for experiences, they demand experiences. Okay, think of yourself as a consumer. That's exactly what you do. Okay. Now, let's think about the new digital experiences that have been developed to improve consumers' financial lives. Okay. Today, you have the ability to apply for a card or to open up an account. You don't have to go into a branch to do that. I mean, it's a pity you guys are, we could actually do a poll here, and I'd love to do a poll and find out from you, when was the last time you guys actually went into a branch and you guys actually, opened an account in the branch? I can assure you it's probably 30% of you have probably done it, if not less, because we all do it through our mobile phone, or we do it, virtually through the internet, because that's what we do, right? So account opening is all happening, on the top of my hands. Financial visibility. If I want to know how much is in my bank account, I don't go to an ATM to look what's in my bank account. I simply look at my phone, or I log on to my banking, to my banking account, and I'm able to see exactly how much I've got in my bank account. And then lastly, if I want to borrow money, I'm able to do it, through my mobile phone as well. So all these experiences are being developed to improve, a consumer's financial life. Now, like I mentioned to you, if you think about the previous slide, what happens in the background, you don't know within a typical, payment experience. You don't know what happens, okay? Because all you want is you want your goods and services and you want to leave the store. Typically, when opening an account, you don't know what happens in the background, where, from a KYC perspective, you've got to obviously make sure that you're not committing fraud. So KYC checks happen. Fintechs help with that. Then there's obviously loan origination. Fintechs help with that as well, and payment businesses. So all these things are companies that are doing work in the background, and you guys don't even know what's happening, but you shouldn't know, right? All you want is a bank partner or a financial services partner that you can trust to improve your financial life. Moving on. I think the screen is stuck. There we go. So where is this going? So as this convenience is taking place, it's obviously giving rise to what we call e-wallets, okay, and what we call X-Pays. Now let's break down what an e-wallet is and what an X-Pay is. I'm just mindful of time, so I'm going to go through this fairly quickly. What is an e-wallet? Okay, an e-wallet very basically provides an electronic means of holding cash. So in countries like Kenya, I'm sure you guys have heard of things like M-Pesa, okay, money is stored electronically on a person's mobile phone. Remember that proxy piece? So I don't have an account number. I have my mobile number, and behind my mobile number, I've got funds that sits in there. That's what you call an e-wallet, okay? And what are these e-wallets used for, okay? So within an ecosystem, it's used for peer-to-peer payments. And what is a peer-to-peer payment? It's simply money going from Muhammad to another person. It's a person-to-person type payment. Then it's called bill payment. So for example, if I want to pay my bill, like my Netflix subscription, I'm able to pay my Netflix subscription, and that's what we call bill payments. So e-wallets are used for that. And lastly, is what we call person-to-merchant payments, where I'm owing Sagar money. Sagar has a store, he's a merchant, and I pay him using this specific e-wallet capability. Now, I know this must be a lot for you guys to consume, and it must be a lot of information overload. But I think if you get the concept of methodology, or you get the right methodology in terms of authorization, clearing, and settlement, I think you guys would become, I think all of you on this, on this webinar today, on this call today, will be payment experts. Okay, and we hope at Mastercard that we get to see many of you, join our business as well. Okay, then let's speak about X-Pays. Now, in the beginning of the presentation, I spoke about the digital giants offering, payments to their consumers. Why would, so this is a Samsung phone, right? Why would Samsung enable a payment capability? Okay, why would they enable a payment capability on their phone? Why would Apple do that? Why would Google do that? Okay. So I like to call it eyeballs. Okay, it's all about eyeballs. Think about it. How many of us are addicted to Snapchat? How many of us are addicted to Instagram? We are on social media all the time, because that's what they do. They've created algorithms to ensure that our eyes are forever on these apps. Similarly, these digital giants want to create stickiness, okay? And they want to create a capability for you where everything is digital, everything sits on your mobile phone, so you don't have to look for anything through, anywhere else. Everything all sits on your mobile phone. And then lastly, and most importantly, by them keeping your card information on the mobile phone, with all the data they're able to see, it's only a matter of time before Samsung is going to send you an SMS. Well, it's so last season, who sends SMSs today? But they'll send you a notification to say, hey, Muhammad, guess what? We know all of your information. How about we give you a $500 loan? And because we know that you're good enough or you're good to repay the money back to us. And what does this mean? This means that Samsung, Google, Apple, these guys could become the banks of the future. So as a banker, and thankfully I'm not a banker, but if you think about your banking, or think about your bankers, think about all of them, they are extremely afraid because, I wouldn't say afraid, but they are looking at what's coming around the corner, because with this information, they could easily be disintermediated in the near future. So I remember I asked the question, where is payments going? Payments is the next, it's not the next big thing, it is the big thing. If you look at how much money is invested into fintechs, more money goes on a yearly basis into financial services business like fintechs than going into providing clean water. And this is globally. So people who have money to invest would rather put money into a financial services business to provide people with easy financial service capabilities than to put money into providing people with clean water. That's the statistic. This comes from Silicon Valley. You guys can Google this. You guys will find this information. And then lastly, I don't know, we're running out of time, and I'm sure you guys have a lot of questions. I hope you guys have easy questions. I'm not going to go into detail here. I'm sure this will be shared with you guys post the call, but where is this going? Where's payments going to? Or what are our predictions? Okay. We typically see that e-commerce and m-commerce is definitely going to grow. People are becoming more and more trusting when making payments virtually or when making payments through their mobile phone. What we're seeing is peer-to-peer payments, point number 5, will become the new anchor for customer acquisition. So people, in order to send money, you'll see a lot of more peer-to-peer payments will happen. I mean, think about it. If those of you who have been to China, cash does not exist in the ecosystem. Nothing exists from a cash perspective. Everything is done through WeChat Pay or through Alipay. It's all done through the mobile phone. And lastly, most importantly, cryptocurrencies will remain disruptive threats. Cryptocurrencies are gaining a lot of dominance. I'm sure we've all, myself included, we've all invested in crypto. Let's not speak about the crash, but let's speak about how cryptos are really coming through, and blockchain will become the mainstream, because blockchain is that ledger platform that is transparent and it is trustworthy. And so we're going to see a lot of things take place through the blockchain network. And so what does this mean from an emerging technologies perspective? What we're seeing is the coming together of powerful technologies that will lead to a quantum leap of commerce in our world at large. So we're seeing 5G, and remember, 5G is an experience. 5G is actually, it's not an experience. 5G is a way of life, and it's going to really, wouldn't say dictate, but become a way of life in terms of everything that we do, from waking up in the morning to running our homes. Everything will all be done electronically using the 5G network. Artificial intelligence, where chatbots will be able to assist us in terms of making decisions that we want to make. Internet of Things, everything being stored in the cloud, and most importantly, blockchain. Let's not forget blockchain. Okay, this is basically where the world is going to from an emerging technologies perspective. And I think from a payments perspective, what we're seeing in crypto, what we're seeing on blockchain, what we're seeing on 5G, we're literally only just touching the surface. Thank you. So guys, I see you've come online. I do have one more slide. I don't know if you want me to touch on it, or if you're comfortable for me for us to go to questions. I'm just mindful.
No. You go on, and we touch on this for a minute, because there's quite important stuff on this slide, and then we'll go on to questions.
Great. Okay, thanks. Now we're speaking about the big disruptions. Sorry, I thought I could have a really cool exit, but anyway, let's go to let's speak about the disruptions. Okay, 3 main disruptions are taking place within the payments world, or the payments landscape. Crypto or blockchain, which I've spoken about. Okay, consumers are woke. You guys are woke, right? They want transparency. So blockchain, what it does is it applies a distributed ledger methodology, whereby One transaction is recorded across multiple ledgers. So it's not just one ledger, it's recorded across multiple ledgers, which creates the chain of blocks. And so it's easier to track and manage transactions. And that's why Bitcoin is where Bitcoin is today, right? Because it enables that transparency. Crypto, we believe, is here to stay. And there's examples of crypto companies like Binance, Rain, and BitOasis. Social payments, remember I spoke about WhatsApp Pay? There is a thing. It's in Brazil, and very, very soon you'll see it coming into your markets as well. Buy now, pay later. Gen Zs, millennials, like me, I'm a millennial, believe it or not, we don't really want a credit card. 30% of the population between 80 to 30 years old believe they don't want a credit card. And so what we're seeing is we're seeing the emergence of buy now, pay later. And we see that by 2025, buy now, pay later will account for 8% of total commerce spend, across the Middle East and North Africa. Big investments are happening across the kingdom into buy now, pay later. We're seeing big investments take place here. So I think watch the space. People are not using credit cards anymore. Buy now, pay later is the in thing because it removes the interest free, or it removes the interest, that consumers usually would pay on a typical credit card. And that's me.
Muhammed, thank you very much for a whirlwind tour of payments. That was super interesting. I learned a lot from that session as well. I think everyone who's joined has learned a lot. And as you said, hopefully we can all become payment experts going through this session. So I know we're quite short on time, so I'm just going to get straight into the questions if that's okay, Muhammed. There's a few areas which we're getting reoccurring questions. So one is just double downing on blockchain in particular. So for blockchain, where do you see the biggest impact on payments? Taking crypto on one side, but using distributed technology, the blockchain itself, where are the biggest? What's the biggest impact you're seeing on the payment infrastructure?
Yeah, I think we're definitely going to see a lot of more cross-border type payments. So we live in a world where the world has become small. So allow me to just double click on that as well. We're seeing where, when it comes to take migrant workers as an example, when they want to send money back home, they got to go through multiple hoops of getting funds back. And I see that crypto, or should I say blockchain, is going to be a good way of sort of getting peer-to-peer payments, taking place from person to person. And remember I spoke about the barrier to entry. I think blockchain is going to be a very easier barrier to entry. And that is why central governments are looking at regulating this type of payment, creating this fiat currency to ensure that this doesn't happen on some rogue network, if I can call it that, but it's happened within the confines of proper monitoring, proper fraud limits being in place to ensure that, nothing happens in this dark world. It should all happen in an open type platform.
Excellent. Thank you very much, Muhammed. And then I just want to jump onto we've got quite a few questions on e-wallets actually. So where exactly, I'll shoot these questions, you can probably answer all of them together. Where do e-wallets fit within the payment network system? So are they sort of a replacement for the merchants, acquirers? Where do they sort of fit in that sort of system? And then just talking a little bit more about the big giants, Apple, Samsung, are we seeing them becoming future banks potentially? And then I guess another question is just around which is the best e-wallet, right? So should you be using Apple Pay? Should you be using STC Pay? How do you decide which e-wallet you should be looking at?
So I'm going to answer the last question that you asked first, right? I think it's all about convenience. It's all about choice. It's all about trust. Remember, I mentioned that that's what consumers are looking for. Okay, so I can tell you now they're all a safe method of payment. You need to decide for yourself what are you most comfortable to use from an e-wallet type perspective, from a digital giant perspective. Okay. A very, very good question that was asked around where do e-wallets fit into the payment network? Right now, as it stands, e-wallets sits very much independently on their own. Now, what that means is that it does not enter the payment network at all. However, people who use e-wallets are very limited to that, to that ecosystem. As an example, a lot of the e-wallet players are not integrated into Amazon payments, as an example. So you still need a card to make a payment. So what we're seeing a lot of the e-wallet providers coming to us and saying, how do we enable a card on our e-wallet platform so that our consumers can shop on Amazon, our consumers can shop on Uber? So that answers your second question. And just remind me again, what was your third question? Forgive me. I got quite a.
No, I think the third question was rather about future banks. So do you see Apple possibly coming?
Yeah. So I think who knows, right? Who knows? I mean, 10 years ago, did we even think or consider anything around blockchain? It was there, it was happening, but it wasn't really a hype. 5 years ago, or 2 years ago, was buy now, pay later even a thing, right? If you're a payments fundi like myself, I love payments. Buy now, pay later last year, the buzzword for payments was buy now, pay later. That was the buzz term. The reality is we don't know where these guys are going to go, but I wouldn't be surprised if they do become a bank. I wouldn't be surprised if Apple or Samsung say, you know what, I have the ability to enable transactions. I have the ability to run a payments network. Why can't I enable lending? Why can't I get these people today? They are able to store their bank cards with me. Why can't they store all their money with me? So I think we're going to see a lot of change. We're going to see a lot of disruption in the space. Most importantly, it's good to stay woke. That's most important.
Absolutely, Mohammed. One final area is just around the payment network, and I guess this touches on the future for Mastercard as well, right? So if we're seeing these new technologies coming in, becoming more decentralized, what happens to those groups in the middle? What happens to the Mastercards, Visa, the Madas of this world in the future? Do they get replaced? And if so, what do they get replaced with?
So I think they will not be replaced. The way in which MADA, Visa, Mastercard, American Express, how they're looking at their business is they're transforming their business to become a multi-rail business. So when I say especially Mastercard is a multi-rail business. So for example, when a payer wants to make a payment to a payee, regardless of what instrument they use, whether it's a card, whether it's an e-wallet, Mastercard has rails in place. And we would like those rails to be utilized, whether you want to use blockchain capability, whether you want to use a remittance capability, whether as a payer you want to use an account-to-account capability. These rails will remain in place. Mastercard's been around for 50 years. They've developed this payment network. So I think the network is there. It just depends on the instruments that will be used, but the rail will remain in place from one network to the other. So will MADA. MADA will do the exact same thing.
And one question specifically we've got about Mastercard is there's been some press around offering biometric payments like facial recognition and fingerprint scanning, and Mastercard I think has been involved in that. Can you just talk a little bit about how you see that fitting into this future of payments and convenience that those things provide?
I think biometric, thanks, it's a very good question. So Mastercard's not a card company. Mastercard is a technology company. Thanks for that question. At least I get to sell Mastercard. But so we are technology. We are financial technology business, and we provide all things that are around the payment. So as a consumer, do you want to enter your PIN every time you make a payment? Because I mean, think about it. You've got so many PINs and passwords you need to remember. You got to remember your Facebook password, your Instagram password. Now you got to still remember all your PINs. It's crazy. But I've got a biometric. Why can't I use a biometric? Because I can access it through my phone. Even cards have a chip with a biometric today. So biometric is a secure means of authentication. It limits fraud, okay? Because if somebody wants to, do a transaction on my watch or on my phone or using my card, they need to cut off my finger to do that. Or should I say, we have biometrics like, iris scanning, etc. These are things that just provide security within the ecosystem so that it creates that convenience factor and that trust factor when making a payment.
Fabulous. Mohammed, unfortunately, we've gone slightly over time, but thank you very much for joining us. And thank you for answering all those questions. I mean, I think this session will be recorded for everyone who's been asking, and we will be resharing it because there's so much knowledge in this that I think we need to spend a bit more time and probably need to go through this a couple of times just to absorb everything. But Mohammed, thank you once again for joining us. Everyone, participants, thank you very much. Attendees, thank you very much for joining us today. Just a few housekeeping things we've been asked about. In terms of your certificate, so you get a certificate if you managed to attend 8 out of the 10 webinars. So even if you missed the first 2, as long as you've attended from today for the remaining 10 webinars, you will get a certificate. Another question which we've been asked about is email confirmations. Don't worry about confirming your attendance. Your attendance will be confirmed automatically by joining the Zoom link. So we have that record already. And then in terms of the recordings, so the recordings will be shared within the Telegram group. Maha will share the link of the Telegram group, so you can join that if you'd like to learn more, and we'll be sharing more reports and links in that group as well on things around payments, around banking. And next week, week 4, we are going to be covering finance, investing, and crowdfunding. So that's going to be another great session as well. We've got Manafa joining us for that, and they will be covering everything around those sort of areas. So we look forward to seeing you next week. But other than that, all I've got to say, thank you very much. Have a good evening. And thank you once again, Muhammad.
Thank you, guys. It's been a pleasure spending time with you, and I hope to see you guys again soon. Thank you.
Take care, everyone. See you soon.
Bye-bye.